Hello, and thank you for joining us for another profitable 30 minutes on television. This is Capital Market, and I'm Ini John Mekwa. You're welcome. Well, just before we go into the discussion, let's begin with a review of equities market outside our shores. We start with the United States, where stocks on the Wall Street closed Friday's trading session strongly positive. The three major indexes closed the market higher and positive for the month amid better than expected third quarter earnings report. The Dow Jones Industrial Average jumped by about 1.09%, while S&P 500 as well as the Nasdaq Composite rose by 0.75 and 0.50% each. Over now to the European equities market. They also closed higher on Friday as corporate earnings drove the indexes north. The UK's FTSE 100 index was up 0.37%. The German DAX climbed 0.81%, while the France CAC index rose by 0.63%. Also across Asia Pacific, the markets, which were also first to close due to time difference, ended Friday's session positive across board following overnight gains on U.S. market. Japan's Nikkei 225 surged by 1.81%. Hong Kong's benchmark Hang Seng Index ended higher by 1.48%, while Shanghai Composite was up 0.40%. Well, let's take a look at activities at the unlisted securities market. This week, investors lost 24.29 billion in value naira as the Nasdaq OTC market capitalization closed at 616.99 billion naira, resulting from a negative movement in prices. However, Securities and Exchange Index closed the week on a positive return as it increased by 1.22%. Total volume traded during the week was 1.095 billion units, while total value traded during the week recorded 500.55% increase to close the week at 584.46 billion naira. Now, in the fixed income market, the bond market segment was largely quiet on Friday, save for some interest across selected maturities. At the close of trading, the market was mixed with selling pressure at the short end of the curve, while the mid-date maturities saw slight interest. However, the overall average benchmark yields closed 8.25%, indicating a week-on-week rise of 1.53%. At the Treasury bills market, the average benchmark yields closed 5.20% at the close of market yesterday. It started the week on a quiet note with minimal volumes traded across the board, but maintained a bullish trend for a major part of trading in the week. Meanwhile, the open market operations bill was flat. It closed today at 6.47%, posting a week-on-week fall of 1.30%. And for CBN special bills, its average benchmark yield closed the day at 6.03%, and it fell by 0.17% week on week. Now let's go to the equities market now. The equities market closed the week with impressive gains after starting off on a negative Monday. Strong bargain for stocks propelled both the all-share index into new levels in just 4 trading sessions this week, as they gained 1.39% and 1.54% each. Across the sectors, positive sentiment swept across 5 key sectors of listed equities, particularly the banking counter. We're going to talk about this. FBNH has been doing so well. It's gained 2.64%, and this is largely attributed to investors' interest for the shares of First Bank Holdings. And volume and value, as well as number deals, were carried out on shares transaction within the week was highly impressive also, in contrast to the last week, as 2.83 billion equities changed hands for 31.65 billion naira in over 23,000 deals. Champion Breweries led 44 other gainers, up by 49.52%. Learn Africa top among 14 losers, while the trio of FBN Holdings, GT, Co and ETI were the most traded stocks for the week. Well, to weigh into or make some comments at least about how the week went in the equities, we have stockbroker and market analyst, Mr. Rotimi Fakayejo, joining us. Good evening, Mr. Fakayejo. Good to have you in person.
Good evening. My pleasure too.
So this week was a very juicy one because even though the week started negative, the first trading day, Monday, was negative, but after that it just went on fire, was one of the ways that... what happened?
Well, I think we approach the end of the year. And looking back on the performance of the market, that is the various securities listed on the exchange, I think investors are actually convinced that they are definitely going to have a good return on their investment by the time the year closes. So there has been a lackluster attitude towards the market before now in the first and second quarter. But in the third quarter, we started seeing interest, increasing. But right now, I think the market is actually on fire for good.
So does it mean that people hold up or hold out from January, and then when it gets to the last quarter, people delve into the market? Are they missing anything, or is it just a safe way, to invest?
Well, I think they may have very tangible reasons for that, because looking at the performance for the year ended, and also the start of the year for 2021, it wasn't really that impressive as would have been. But after the first quarter, second quarter, there was consistency in the performance. And the third quarter consolidated it all. So investors now believe, okay, is there any other window for them to put their money in that could yield as high as putting it in the equities market? I don't really think the money market instruments will be able to yield as much as 5% between now and February next year. So, and we have securities listed on the exchange that can actually give a return in terms of dividend if you buy now between 10 to 15%. So investors have no reason to hold back. And I think the market has been tested, and we are no more seeing the kind of volatility we used to see in the past when there was so much participation of foreign portfolio investors. So there is a measure of stability now, and so investors are more comfortable, and they know fully well that if they put in fund, at least they can't really see it going downward, but at least even if it doesn't move upward as a desire, it will still remain at a steady value.
So is this a consistent trend, or do we just watch and see, okay, for this year it happens like this, for next year it could happen the other way?
Well, I think what we actually need in the Nigerian equity market is more participation from the local investors.
But we have that. Now we have more local investors than foreign investors.
Yes. But if things do get more interesting and we have the foreign portfolio investors coming back, they cause a lot of fluctuation within the market. Because on impulse, they can take their fund out. And when they do that, it causes a sell-off in the market, and the market doesn't have enough capacity to withhold that sell-off. So when it happens, we see everything going down. So what if that maintained a trajectory of about 20, 30% earlier on, we see it coming down by about 35, 40%. So where you started is much lower than where you are presently. So such inconsistency brought about by participation of foreign portfolio investors is always not too positive for the market. And if you look at over the years, has the market really moved? My answer to that would be a no. Because if you look at the total market capitalization and you deduct the value of new listings in the period of about 3-4 years from what we have right now, then definitely we have not really made any positive move. But for the new listings that we have in terms of Airtel, MTN, Seplat, during such period, I think the market has really gained a lot of traction. So I think for now, this will be consistent if local participation is consistent and consolidated before the foreign portfolio start coming again. So by the time they come, right now we have a ratio of 80% local participation, 20% foreign portfolio investors. And if we maintain that trend, even when volume grows and the value of the traded value increases, if we still maintain that ratio, then definitely our market has emerged.
Do you see the foreign portfolio coming back anytime soon?
No. They're not going to
But that's also a minus for the economy as a whole, even though it has its own advantages.
Well, I think for me, I ask myself, what is the value addition when foreign portfolio investors bring their money to Nigeria? I don't see any value addition because they are not investing in IPO, which will be the fund which will be available for whatever the company is in the IPO to do their normal business. what will have been better is us having foreign direct investment. Foreign direct investment will stay as much, a minimum of 5 to 10 years. But foreign portfolio investors is hot money, and it can move at any time. So I believe they are staying away. Well, it may not have given the kind of a positive trajectory that we want, but definitely we are good for now.
All right. Then we see FBN Holding has been on fire for, I think, it's going to 3 weeks now or so. They've been top trades, top gainers. You know, they've really been on fire. What's driving this?
Well, I think there's a renewed interest. And I think there are positive vibes coming from different quarters. But since those ones are not fully substantiated, then we may not really be able to talk much about it now. But I think all in all, the volume of transaction traded so far is quite substantial. And I think for me, is come to stay, because the value that I've gone invested definitely is going to remain in the hands of those investors.
All right. Well, another big thing that happened during the week was the listing of the NGX Group itself. The Nigerian Exchange Group PLC finally listed 1.96 billion units of its shares by introduction on the main board of its subsidiary, the Nigerian Exchange Limited. This follows the milestone demutualization and restructuring of the now defunct Nigerian Stock Exchange earlier this year. The company is listed in the financial services and capital market infrastructure sector with the ticker NGX Group. In case you're looking for it, look for NGX Group. Commenting on the listing, the chairman of the NGX Group, Abimbola Gumbanjo, says that the listing of the NGX Group on its trading subsidiary is another milestone attained pursuant to the group's 2018-2021 corporate strategies. So, Mr. Fakayejo, this is another good move, I dare say.
Well, it gives every one of us great joy that eventually the demonstration took place, and there was an initial listing on NASD OTC markets before the eventual listing on Nigerian exchange. Good enough, every other demutualized exchange, virtually all the demutualized exchange all over the world, are listed on their own exchange. So now that they've really brought it back from NASD OTC market to Nigerian Exchange Group, I think they've really achieved that milestone. And I think the market should always be in the news. And now that the market is in the news, and what we are hiring from the market is quite positive, and in that wise, if you look at the volume, value, and index movements, everything has been green. And I think investors should really look at this more deeply and take advantage of the market as we have it now.
Okay, so but what changes should we expect from this? What really would change? People, investors have the opportunity to buy into this, and then what? What else?
Well, I think the change that I would love to tell everyone, if they care to hear, is that right now, consistently over 2 years, the kind of volatility we used to see in the past, right from the COVID lockdown period up to now, I think there is a measure of consistency in what we have in the market. So the investors are to expect better performance of equities as time comes, and also a better dividend yield in terms of their return from their investment, on their investment. And also, to add to that, I believe strongly that the way it stands right now, investors need have no reason to allow panic to set in at any point in time. We have seen a lot of volume and value traded, much better than what we had in the previous months of August and July. But for now, I think the market, I would say, for now has arrived. And investors, whichever good stock with sound fundamentals that they put their money in, I don't think they're going to have any regrets at all.
So we're going to finish the year strong.
Definitely.
From your perspective.
At least we are now year to date 1.48% positive. So that is a good one. We've eroded the negative trend and now it
Heading.
can only get better.
I hope so. With the listing of the NGX Group, what changes should investors or potential investors expect in terms of structure, strategic partnerships, service offerings? Do we see any changes? Does this bring any change in that area?
Well, after the time the demutualization completed, the structural changes had already been put in place. Now, what we're going to see next is actual performance of post-demutualization. And I think, and we know fully well that the performance of the pricing of a stock is a good indicator of whether that company is doing well or not. So now they are being the ones showcasing everybody.
Now we're going to watch them.
Are going to be showcased.
We're going to watch them closely
and
to
I
see
think
their
they are ready
management,
for
their
everybody.
structure.
And I believe that they're not going to let us down. So the performance, I believe, as they have transited, we're going to see at least quite a good performance as they are doing everything to actually make, not because before now, it was a non-profit organization. So they're going to have to declare dividend to their investors. So that couldn't happen in the last AGM because it was still the old Nigerian exchange books that they put forward for this
So will they
year.
be declaring this year?
I know. The next AGM they're going to do is going to be in 2022.
Okay.
So as at that time, I believe there's definitely going to be a good performance coming from them.
You know, so all those rules, and if people do not declare on time, they do not send in their papers on time, we're going to be watching NGX Group now.
Yes. But I believe they won't disappoint us.
I believe so for with them also. Well, something else that happened during the week, the Nigerian Exchange Limited announced the resignation of Mr. Oscar Oyema as the non-executive director of the company. The resignation, which took effect immediately it was announced this week, came ahead of the listing of the Nigerian Exchange Group on the main board of its trading subsidiary. However, he remains the group managing director and chief executive officer of the Nigerian Exchange Group. Meanwhile, the chief executive officer of NGX Limited, Mr. Temi Popola, mentioned that the exchange owes its solid foundation to the efforts of leaders like Mr. Oyema, who worked tirelessly to build the capital market infrastructure. So, Mr. Fakayejo, this is another change that came on. This was a necessary change.
Yes, I think there was some voices that raised. I think I read in the papers that it shouldn't be. And when you look at companies with a group structure, actually, the group managing director or the chairman is not always a member and a non-executive director in the subsidiary because everybody is still coming back to report to him. So I think it was, I don't know, it wasn't really the kind of arrangement that it ought to be. But for good, for now, that has been corrected. So we say kudos to the exchange.
So this
at least
is
for making that quick adjustment so that they will continue to be in the good light of the investment world.
And moving outside the NGX now, listed Tier 1 lender Access Bank PLC has finally completed the acquisition of a majority stake of about 78.15% in African Banking Corporation of Botswana Limited after 6 months of negotiations. The new acquisition will form part of the bank's nexus for trade and payment in Southern Africa and the border commerce trade region. Then Botswana, which is the country's 5th largest bank, is a retail-focused commercial banking institution listed on the Botswana Stock Exchange. With the latest acquisition, Access Bank now has presence in 10 African countries after similar acquisitions in financial institutions domiciled in Zambia, South Africa, Mozambique, among others. This is a good one for Access Bank and I think for Nigeria.
Yes, I think for me, we should really applaud Access Bank because now they are competing favorably with ETI, EcoBank Transnational Incorporated, in the African space. And I think with the base of Access Bank being in Nigeria, I think it's a good development for us. And I think we are going to see that impact positively on their financials and also in the way that the stock is being priced. So we've been seeing some movement in terms of pricing recently, but I think it's just the
This will
starting
certainly
point.
attract some investors because then there's the prospect of movement, further movement, you know, with
Exactly.
this expansion.
Because for now, in terms of diversified operations in different countries, like I said earlier, I think they are next to ETI. And to a great extent, I don't know who is still first, I mean second amongst Access Bank or UBA in terms of presence in other African countries. But when it comes to balance sheet size, I think they are about number one. So where the market is looking forward to actually substantiate that number one position in terms of balance sheet is in profitability, in dividend return, and also in pricing of the stock. And I think given a good period of time, we're definitely going to see that happening. So it's definitely going to be a good one for them.
Okay. So I'm just curious because recently I had to travel to Côte d'Ivoire, and payments, you know, with your card becomes a challenge. So one of the things, I mean, this is outside the equities and all that. Do you think that with this expansion and having Nigerian banks in this other, especially African countries, will it make this experience, you know, more pleasant when you have to go outside the country, neighboring, especially in African countries, and, you know, making payments become difficult?
Well, I think it may not really have to do with the operations of the bank. It has more to do with the total availability of foreign exchange available to Nigerian banks in their international banking transactions. So if there was a time that you could go with your card to Dubai, to US, and do as much payment as about $1,000, $2,000 in a month, but now that has been cut to size. So it's not really the banks, it's in the availability of foreign exchange.
Is there availability of foreign exchange or the structure, the communication of technology between the countries?
Well, but one thing that is very key, Naira is not spent in Côte d'Ivoire.
Yes.
Naira is not spent in South Africa. So that conversion, that convertibility is subject to availability of foreign exchange. So if it's not available, then there can't be conversion. So if we are not, our payment system, in terms of our receipts from other countries, is still being less than our payments outside the country, then definitely we're going to have this kind of problem, even if Access Bank should have presence in all African countries. So, but if we improve our foreign exchange earnings, then definitely it's going to be much easier.
See why we need those foreign portfolio guys.
Well, their money will only stay for a while. And when they want to take it out, it's a problem for us. And we've seen that in the past.
All right. Well, just before we go now, let's have your outlook for the week. I know you said that we're in for a bull run for the rest of the year. You don't see any correction. I mean, after all, on Monday, it was a negative trade and only 4 days had positive. What do you see this coming week?
Well, I think if you're talking about correction of what? Because the only stock that has actually maintained unusual trajectory is FBN Holdings.
Yes.
And when it got to 9 Naira, everyone thought that was the end. When it got to 10 Naira, we thought we're not going to see the bull run anymore. But day after day, we are seeing higher volume being traded and also more demand for the stock. So I think for First Bank, for FBN Holdings, I don't think we are expecting any correction. And for the other ones, the other equities, we are yet to see them move positively. And they still have that upside to cover. So we expect that even if it may not move the way it did previous week, this week, but definitely we are not going to see a return to negative trend that had been the case in August and July.
Okay, all right. Thank you so much, Mr. Rotimi Fakayejo, stockbroker and market analyst, for sharing your thoughts with us this Saturday evening. We appreciate it. And just before we go, well, we'll tell you what we expect from the markets in the coming week. In the coming week at the equities market, traders expect investors' sentiment to be shaped by the third quarter earnings releases and the outcome of the bond auction scheduled to hold on Wednesday as they see clarity on the movement of yields in the fixed income market. The DMO will be offering instruments worth around 150 billion naira through the reopenings of the federal government January 2026, April 2037 and March 2050 bonds. For the Treasury bills market, traders and analysts expect yields to further trend lower next week as investors sustain buying activities in reaction to the moderation in the stop rate of the one-year paper at the last primary market auction. And at the bonds market, the outcome of the bond auction is also expected to shape market sentiment and the direction of the yields. We'll see how true that comes. All you have to do is follow the news, and we are right here on Channels Television to give you that news. So that's it for the program today. Thank you so much for being a part of it. I'm Ini John Mekwa. Enjoy the rest of your weekend.